Welcome and thank you for joining today's 504 call. Please note that all participant lines will be muted until the Q&A portion of the call. We will provide you with instructions on how to ask a verbal question at that time. You are welcome to submit written questions during the presentation, and these will be addressed during Q&A. To send a note, select All Panelists on the Send To drop-down menu of the chat panel located on the lower right-hand side of your screen. If you require technical assistance, send a note to the event producer or call our help desk at 888-796-6118. With that, I'll turn the call over to Linda Riley, Chief of the 504 Program. Please go ahead.
Hello, everyone. We're talking to you live from SBA headquarters in D.C. We also have some folks on the line from the Sacramento Loan Processing Center in Sacramento, California. We're here today to give you the latest updates on the 504 program, and I would like to turn it over to our boss, Bill Manger, the Associate Administrator of the Office of Capital Access.
Good afternoon. I wanted to share with you some of the most recent numbers of all our loan programs. So we'll go to the next slide, please. Here's year-to-date activity showing comparable periods for the last several years. As you can see, 7A continues to show a slight increase in 2018. And 504, after a very strong year last year, has shown a slight dip, but we are looking for that turnaround over the course of the rest of the summer and the rest of the calendar year. And we're going to be working on a few things to try and help those numbers as well, namely as part of the administration's deregulatory actions. We are looking at trying to streamline some of the closing process and some of the corporate governance that CDCs must operate under. We have received white papers from NADCO on those topics, and we're reviewing those with an eye towards making those streamlining improvements to the program, and so we hope that will help as well. The next slide, please. And this shows year-to-date activity with some of the segments of our marketplace. Again, just remember that these numbers are collected on a voluntary basis, but it shows obviously an increase in reported lending to minorities. Women is holding very strong. Veterans is down again slightly in this 2018 year. We've seen slight declines since 2016, and so certainly we encourage all of you out there to do all you can to make sure that we are getting capital to our veterans who want to start or grow small businesses. Okay, next slide, please. And this last slide shows our small loan programs. The microloan program is having another very strong year. We had a record last year. We got out $69 million in microlending last year, and we are on pace to actually outdo that again this year. I think we're probably going to come in somewhere around $70 million by September 30th in the microloan program. Community Advantage, again, continues to show strong growth ever since it was conceived, and so as you can see, those numbers are strengthening year over year, and that's all very good. One thing I just wanted to point out, too, to look for later this summer, we are looking at having an electronic fingerprinting system in place so that, again, all fingerprints that are required can be submitted electronically. There will be no more hard copies by snail mail unless that is the only option, but we are looking to have everyone move over to electronic submission of fingerprints. And we've identified a channeler that has been sanctioned, again, by the FBI, so those fingerprints go immediately into the FBI, and within 48 hours we will have a response on those fingerprint submissions. So that will really save a lot of time and make the process a lot more expedited for everybody. So look for that a little bit later on this summer, but that's really all I have to say, and we'll hand it off to OPSM.
Good afternoon, everyone. This is Glenn Hannon on behalf of Steve Kucharski. Just giving just a brief update here. We continue to work with our 504 vendors to improve the process on transmitting information both for origination and potentially down the road for servicing as well. So that's where we currently stand. If there's any issues or questions, please reach out to us, and we will address your issues.
Standing in for Susan.
Hi, this is Paul Kerwin in the Office of Credit Risk Management, and I'm just going to give everyone an update on what we're doing as far as the SMART reviews. There are the on-site and off-site reviews that we conduct of CDCs. We have about 50 of them planned for this year. 80% of the on-sites have been completed, and of those 16 on-sites, all but 4 of the reports have been issued. We also do desktop reviews or off-site reviews, and we have 30 planned for this year, and about half of those have been issued. So we should be, by the end of the fiscal year, all of the on-site reports issued and all of the SMART analytical reviews. We're also continuing to review all the CDC's annual reports, and most of the CDCs, I think about 60% of them have a fiscal year end of September 30. So those reports have been coming in pretty steadily over the past months. I'll just remind those of you who aren't aware, we do prefer to receive those electronically. We'll save postage and processing. We have an email inbox set up, CDC annual reports at SBA.gov, and that's all. Thank you.
Hi, this is Jim Kim from OFPO. Just going over some of the center updates. Turn time for origination for 504 origination is remaining about 4 days. Environmental reviews are remaining about 4 days as well. Servicing centers actions are turning around about 3 days for both Little Rock and Fresno. Sacramento reported out that since 25-year debenture has been available about a month ago, they've approved 188 loans, totaling about $205 million. One of the focus that we're having as a center of both Fresno, Little Rock, as well as Sacramento on Tom Ford side is to improve the communications and the customer service aspects of it. For Sacramento, we have allowed loan officers and supervisor loan officers to reach out to the CDCs if they have questions, comes into the call center. The call center members cannot answer. We're asking loan officers to reach out to CDCs, providing additional information and clarification from those. And this has been seeing a lot of positive reactions to that from the CDCs. And we're also seeing increased approvals and first round turn time on those loans coming into the centers. Again, Fresno Little Rock is also recommending that you guys continue to submit packages for the servicing actions. They're seeing a lot of complete packages coming in, which is helping them with a faster turn time and servicing actions as well. We have ALP renewal process going on right now. A lot of the ALPs, all of them are expiring at the end of June, and we are receiving recommendation from our Fresno and Little Rock centers for the ALP renewals. So we will be working directly with OCRM and processing the ALPs. I'm sorry, ACLs. ACLs.
Can you tell them what that is?
Credit liquidators. So if you guys have not submitted your request in, please submit your request to your commercial loan servicing centers, and we will address those. Thank you.
Hi, everyone. It's Diana Seaborn. A couple of things. Just so everyone understands, this is an informational kind of meeting. It's not a training specifically. We've provided you with a lot more detail and granularity up front in the slides than we'll be going through here. But we do like it to be interactive. We have invited not only our very important CDCs, but also our third-party lenders who are often somewhat of a neglected population. We know that many of you are also 7A lenders, but we want to make sure that you too have the opportunity to have dialogue periodic about what's going on in CAP access with both the 7A and the 504 program in this case. So some of the comments are very germane to the CDCs and more are germane to our third-party lenders. So we just want to make sure that everyone knows that's who our audience is and what our mission is here is not necessarily to drive you to details and bore you to death, but if you have questions along the way, please feel free to, I guess, put them in, submit them in writing at this point. We'll take breaks periodically so that you can ask those questions of the team that's still here. largely Linda's team. Linda Riley, everyone knows, and her team, Ginger Allen, Bob Accasani, and Warren Boyd are here in support of getting you through what's going on in our 504 program. We are working with the industry this year to improve some things for the CDCs operationally that should flow to a benefit to our third-party lenders in better access, smoother closings, maybe less costly less cost involved in closing loans. So if you have issues and concerns that affect your ability to use the program as a third-party lender, we are always interested in knowing that. It is important that, you know, that we get this information this summer. We're working on the policy. We're working on looking at our regs, and so it's very timely. If you have specific concerns that you need to let us know about, please submit those through either the center, I guess, or more importantly to Linda's policy team here in D.C. as we take a look at what's going on. Obviously, we have to manage risk, so, you know, remove all your rules isn't something that we're going to be able to help you out with. On the other hand, it is a good time, it's a good year, and the environment is right. Bill is very supportive of removing no value add rules from what we do. So keep in mind that you always have the opportunity to say, hey, I like this program, I want to do this, but this is a real problem for me. It helps for us to understand where the challenges are. So on that note, thanks for logging in, and I'll turn it over to Linda and her team.
Sure. Well, we always have hot topics that come up. Usually the Sacramento Loan Processing Center sends out hot topics for the week, so we've got a few that have come up recently. Just a reminder on our appraisal reports required prior to closing, dated within 12 months of the application, with at least 3 valuation methods, and listing SBA as the intended user. And then on life insurance, David's going to go into a little bit more depth. We had a lot of questions from the industry on how to calculate life insurance requirements when they're even required. So if there's no succession plan and the liquidation value is insufficient, then we would have a life insurance requirement. So we're going to go into that in a little more detail with David in a few moments. On the 912s, as Diana and Bill said, big hot topic. Big hot topic for us is that we are going to very soon be having an announcement that we're going back to electronic processing on fingerprint cards. So stay tuned for that announcement, and we'll certainly be getting that out to everyone as soon as it's available again. And for now, we are still using the fingerprint cards. For those the third-party lenders that are on loan committees for CDCs, we can't do name checks anymore, but once we get into the electronic processing, we'll do everything we can to make those fingerprint checks when they're required go as quickly as possible. But you only have to do a fingerprint check if you have answered yes to the questions on the 1081 that would necessitate that. So not everyone will have to do a fingerprint card if you're on a loan committee. So just more on that soon. On the 504 updates, Bill went over the program statistics. We're going to talk really quickly about the 25-year debenture and some SBA updates on appraisal clarifications, credit elsewhere, and we're also going to talk about the 504 debt refi final rule. So the launch date for the 25-year debenture, great news, everyone. April 2nd, 2018 was the launch date. And as of June 1st, we already have 188 applications received. That's quite impressive for the short time that we've been going. We are going to keep in mind that if you had a project that was approved prior to April 2nd, you can't convert to the 25-year debenture. But we do have good news if you have not yet closed, which we'll talk about on the next slide. If you haven't, on the next slide, if you have been approved but you've not yet closed, you can request a 327 action and ask for the 25-year debenture. So we can do a modification on those approved after April 2nd, but that have not yet closed. If the borrower, for some reason, changes their mind and they want to go from the 20 to the 5, we cannot modify any before April 2nd. So that is a little flexibility. I think that was some good news for everyone. Next slide. So on appraisals, The FDIC, the OCC, and the Federal Reserve Board have increased their appraisal thresholds to $500,000. SBA can't do that yet. It would require a legislative update. So we do know that the agency is talking with our Congressional Affairs Office to see what we would need to do to have that considered in future legislation. So those of you who have contacts or trade association groups that you would like to reach out to, if that is something that's of interest to you, that might be your best opportunity to try to help with getting updates. The SOP was released in January, and we've issued notices and corrective notices. We've revised the credit elsewhere notice that was effective April 3rd, and we've rearranged some material. We're going to go over just the very highlights of the most hot topics that we didn't cover in depth on the fall webinars. So we're going to talk about credit elsewhere. I think that's the big news that everyone was looking forward to. We've increased the minimum ownership percentage on credit elsewhere up to 20%. And we've had a lot of good feedback on that change. So thanks, everyone, for your support for our change. We do have some additional guidance on illegal activities. What does that mean? You can not only not make a loan to a business that is engaged in illegal activity, you also cannot lease any portion of your facility that was financed with 504 or 7A funds to these type of borrowers, so just or tenants. So just be aware of that. For our loans outside the area of operations, CDCs in the past had to go through the district office to get approval. Now we streamline that process, and it can go through the Sacramento Loan Processing Center. So that's an efficiency gain. So hopefully if you reach out to a CDC, you'll get a faster response just because they no longer have to go through the district office. On the SOP updates, we had an update on franchise credit elsewhere. We talked about a few moments ago. The affiliation based on management, a change of ownership between owners and EPC, borrower contribution. David's going to talk a little bit more about the life insurance requirements, and then I'll just touch on historic property review. And we just mentioned the illegal businesses, so that's pretty much the update we have on that. On the franchise, the thing with that change, the biggest change was that we are having a new franchise directory, and if it's on the directory, then it's eligible. If you need to submit documents for review, please send them to franchise@sba.gov, and Steve O'Leary and his team will be happy to work with you on that. For credit elsewhere, we talked about the increase to 20%, and we also provided more detail on non-federal sources for the applicants. And so I think that clarification was helpful, and the change to 20% has been well received. For affiliation based on management, the key thing here is that if you have the potential of a management agreement that might exert control over the small business, the Sacramento Loan Processing Center would need to receive and review the management agreement. So we've given guidance in the SOP. What we're trying to do is we're trying to see what degree of control does that management agreement assert over the borrower. So we're trying to provide guidance in this area over how much of the decision processing is independent and how much of the decision process is made through this management agreement arrangement. And this is a test of size. If you're affiliated with a larger entity, then that has a bearing on the size determination and your eligibility. So that's why it's important for us to look at those meetings. The EPC-OC change is for 504. A few years ago, there was a question of whether 504 should be allowed for change of ownership. And thankfully, we have been able to continue to work on change of ownership projects because of the job retention that happens in the change of ownership many times. But we are now permitted when the assets of the EPC are limited to real estate and other fixed assets. that the real estate that has been held by the EPC for at least 36 months, that we can have the change of ownership in those type of projects. So that was new in the last SOP, and we provide additional clarification. There was a change in the special purpose properties equity injection. It's now it's 15% for the first special purpose property, and after that it's 20%. And this is a little bit of a change, and I think some people were concerned that if you had a new business that was also special purpose, that we would increase it even more, but we don't. If it's a new business and a special purpose property, it's still at 20%. So, David, are you on the line? David Miller?
I am certainly here.
Terrific. So, David's going to go into a little more detail on the insurance guidance.
Life insurance, everybody's favorite topic. Two criteria here. Number one, is life insurance necessary? Is that individual so tied to the business that without them the business would be unable to operate? If the answer to that question is yes, then we're going to need to look at life insurance, and we're going to be looking at the liquidation of the value of the collateral and determine whether it's sufficient to cover the TPL and the net debenture amount for the SBA. So up on the screen you can see a lot of numbers and a lot of calculation. What it boils down to is we're taking the appraised value of the fixed assets, in this case real estate and equipment. We're applying a standard liquidation rate, in this case 75 and 50, to come up with the collateral liquidation value. And once we've done that, it's a simple matter of subtraction. Subtract out the first TPL, subtract out the 504, and if the number that's left is positive, then life insurance, the amount would be zero because we're fully covered by collateral. If that number is negative, as it is in this transaction, that simply gives you the amount of life insurance that we would be looking for to support that particular project. So without going into a whole lot of great detail, in a nutshell, that's what we're looking for, and that's how we actually do the calculation to determine the dollar amount.
We also had updates from the Office of General Counsel on historic property review. So CCs will be consulting with local counsel. Just so you know, for those third-party lenders, those also get sent to headquarters for review. But we work very carefully with the CDCs to explain that if they get their state historic preservation documents in with the request, then those reviews go fairly quickly. So if you have any issues with historic properties, let us know so we can do what we can to assist. A little more detail on the illegal activities. Marijuana, I think we're all aware that that's still illegal at the federal level, although some states may have local authority. We don't have it at the federal level. But some people might have been surprised to know that hemp and hemp-related products are also on the list of things that might not be eligible. So just sort of as a rule of thumb, if it's a commodity such as paper, fabric, rope, those hemp-type products are generally eligible. What would not be eligible in hemp would be things that are for human consumption or use. Those have special permits, and so that might be a nice rule of thumb to help you remember what is and isn't allowed in the hemp area. So for the most part, it's the guidance that we were talking about earlier is we can't loan to business for illegal activities, and we can't lease because of the potential for seizure. So that's all that we have to talk about on the SOP update. And now on May 7th, we had a great new announcement on 504 debt refi with the expansion. We have had the authority for some time to do the 504 debt refi without expansion. We have published the interim rule last May 2016, and we have launched it last June 2016, but we continue to listen to our lenders and our CDCs on that could make it better. So I'm proud to say that on the final rule we published on May 7th. It becomes effective June 6th. And so we're looking forward to seeing more activity in this area because of the new opportunities that Ballback and Ginger are about to tell you about. We do have to stay at zero subsidy in order to offer the 504 debt refi without expansion. Thankfully, we are going to be at zero subsidy going into 2019. And for now, the basis rate is 68.2 basis points. But we'll be announcing a fee update in September, so stay tuned. We'll send out more information when that's available. I'd like to turn it over to Ballback and Ginger.
Good afternoon, everyone. Thanks for joining our call. So Ginger and I are going to be going over some of the five major changes to the debt refi without expansion. We're not going to go into it in depth. However, the next few slides will show in depth of what the analysis is and what were the specific changes. So with number one, the first change was to the qualified debt. Qualified debt is now allowing for loans that were modified within the past year and loans that were refinanced within the past 2 years to be allowed into the debt refi without expansion program. The next, I think we have 3 or 4 slides that will break this down into details, which we won't be covering, but you'll have it for your reference and resources. So that's for qualified debt.
The second area that was updated was to the definition of current and all payments due. And essentially the borrower can do a refinance or a loan modification within the most recent 12 months prior to loan app. And as long as the modification or refinance had the effect of only extending the maturity date without advancing any additional loan proceeds except to cover closing costs, then the debt will be eligible in terms of current and all payments due.
Third item is a change to the special purpose properties. Under the debt refi without expansion program, we are allowing for the TPL portion to be below 50%. That's as long as it's not larger than the SBA portion of the loan, and the SBA portion of the loan must be under 35%. And this is of the appraised value.
The eligible business expenses portion of the rule was revised to allow cash out eligible business expenses up to 20% of the project value, as long as the total financing is equal to or less than 85% of the fair market value of the collateral securing the loan. Eligible business expenses are operating expenses that are accrued but not paid within the past 12 months or projected within the next 18 months. You can think of it this way. An operating expense is something that can be itemized as an expense on an income statement, but if it's something that can be capitalized as an asset on a balance sheet, it's not going to be eligible.
The last change that's beneficial to the debt refi without expansion program is towards the disbursement of the authorization. Previously, the authorization was only good for 6 months. Now we're allowing it to be good for 9 months. And you do have the authority to ask for extension of 6 more months on top of it, which is a total of 15. Again, we do have more slides after this that will show. We'll go into more details about it. And we also do have some examples of projects which David Miller has created for us that you guys can go over to go over your structuring. We're going to now open it up to questions, or?
Yes, just one comment though. This past Thursday we gave an in-depth training session on the debt refi without expansion program. So if you're interested in a link to that MP4, just let us know. You can either send it to 504webinars@sba.gov, or you can send it individually to any one of us, and we can send you a link where you can listen to the entire training session on just the 504 refi rule. So, Babak, let's go to some questions. You want to go with, do you have any written questions that you wanted to start with?
Yeah, so first question that we had was, I believe this would be for June, can you discuss the benefits of being an authorized liquidator?
So it's giving the unilateral authority to service and liquidate 504 loans, basically, that is. It is more of and convenience for the CDCs, other than turn time and servicing centers are really short at this point, so other than to have more freedom to service and liquidate or get into the litigation on your own, our turn time and servicing center is pretty short, so this benefit could not be that big, but at the same time, it gives you the freedom to do your servicing and liquidation of property loans.
Great, thank you, Jim. Next question we have is in regards to succession plan. This is the item that David covered in regards to the liquidation. David, if you're still on the phone, I'm going to go ahead and repeat the question. So it's in regards to succession plan. How detailed do the successors need, so the first question, sorry, is how detailed does it need to be? And then do the successors need to be active in the business? What if they have strong management? And then will the successors be required to complete the 1244B?
Well, let's start with the premise that we have an individual in the business who, without their participation in the business could not continue. So if we're looking at a succession plan, if we have a professional doctor or lawyer, somebody like that, I'm not really sure how a succession plan works if that individual is not there to continue the operations of the business. If we have, an employment agency or something like that where we may have 100% owner, but we have some strong people who could step in and run it, then I think what the CDC would benefit from doing is simply telling us the narrative. Who would step in and how would that look as far as continuing the operations of the business? Is there, a strong organization behind it, et cetera? So, it's detailed is kind of an odd question only because it depends on the situation that we're looking at. If a spouse could step in, if grown children could step in, they're in the industry, then we're pretty open to looking at that and saying, okay, we think this business could survive should the unthinkable happen to the primary owner. Would they be required to complete the 1244? If they're not a guarantor, which wouldn't necessarily require them to be, they wouldn't need to complete the 1244. Certainly, if they want to and want to become a guarantor, that would enhance the credit. But there's no written requirement that they do that.
Great, thank you, David. Another question that we have is it's again for life insurance. For the life insurance calculation, why are we subtracting the net debenture instead of the gross debenture?
Because the net debenture gives the most benefit to the small business and would require the least amount of life insurance. We're interested in covering the project via the appraised value and not necessarily trying to cover all of the fees and everything else that go into the gross debenture. So.
Okay, great. Thank you. I think we have another question in regards to life insurance. Says SLPC has been mandating life insurance on any OC with a single owner regardless of the succession plan and or management continuity. Can we submit a 327 to remove life insurance based on the succession plan?
You can certainly, any CDC can certainly submit a servicing action asking us to reevaluate the life insurance requirement based on new or different information. So if they feel that there's a valid succession plan in place that maybe we didn't fully understand, or there's something different than there was at original processing, you can certainly submit a 327 and we'll be happy to take a look at it.
Perfect, thank you. Let's see if any other questions popped in. There's a question that says, for files approved after January 1st, why is the 327 required to submit the signed franchise document to SLPC? We don't have anyone from the franchise team on, do we, Linda?
No, but we can refer that on to Steve O'Leary and have them get back to them.
Okay, perfect. just looking through it for other questions.
Marvin, can we open the phone lines for verbal questions while Babak is still looking at the written ones?
Sure. Ladies and gentlemen, as we move to Q&A, please feel free to place yourself into the question queue by pressing #2 on your telephone keypad. You will hear a notification when your line is unmuted. At that time, please state your name and question. All right, once again, as a reminder, that is #2 on your telephone keypad if you have a verbal question. All right, and I do see one question coming through. I'll go ahead and go to that line. Caller, your line is unmuted.
Hi, this is Sammy Barak from Seacoast Bank. Does the originating bank share in the assignment of the life insurance policy?
David, would you be able to take that question?
The life insurance that we require would be a requirement for the SBA 504 debenture, independent of whatever insurance the bank may or may not wish to have on the project.
Okay, thank you. And one more question I have is in regards to the liquidation value. Should we start requiring liquidation values on SBA 504 loan appraisals?
For the purpose of the calculation for life insurance, I don't think that is necessary. We're going to apply the standard liquidation values that the agency has decided upon for the purpose of that calculation.
Okay, thank you.
You're welcome.
All right, we'll go ahead and go to the next question. Caller, your line is unmuted.
Yeah, this is Joel Hersher of Grove Corp here in Chicago, and one of the questions I had was remaining economic useful life in the appraisal. It seems to be something that's come up a number of times. We looked at it's not a use PAP requirement, but nobody's commented on that. I know it's not on the agenda, but I want to get someone's thoughts on the requirement of that and how it's applicable on the appraisal side when it's not a use PAP requirement. Thanks.
I can look into that further, but we do require the remaining useful life to be the same as the loan terms. Anything else you can add to that, David?
No. What we're looking for in big general picture is trying to determine if the eligible fixed asset has a remaining life that is corresponding to the term of the loan. We don't run into it all that often because in most cases it's clearly evident that it does meet or exceed the term of the loan. But for those properties possibly at the end of their useful life or the end of their economic life, then we may have a question in regards to how that property will be fully utilized for the term of the debenture, and if it can't be or is not going to be, then maybe the term of the debenture should be addressed, and maybe a shorter term would be appropriate.
Yeah, I understand that, but it's something that we haven't had come up until just recently. I thought it was more for the appraised value requirements on the equipment than the real estate itself. So I don't know if there was a recent change because of an implementation. Did that come about? We're going back to banks now and having them request a change in appraisals, and it's just something that we haven't dealt with in the past.
Yeah, if you can let me know what deals you're looking at, I can certainly look into that further for you and see if it's particular. Obviously, starting in the new SOP is when we actually even have an appraisal requirement for equipment. So, you're correct. It's something new to the agency for the 504 to have an appraisal requirement for equipment. So, yeah, if you got specifics, Joel, let me know.
I don't. Thanks, David.
All right.
I just Googled it right now for the use PAP requirements. it does show up in their 2013 requirements to have a useful economic life for both commercial and equipment. But yeah, we can look into that more in detail, Joel, and get back to you.
Thanks so much.
Marvin, any other hands?
It does look like we have one more question in the queue here.
We do have a question from Wayne Williams on insurance.
You want to go ahead and take the written questions or go to another phone question?
Sure, let's take, since Linda just brought this up, so we have a question that popped up as life insurance is required for 100% owners. So basically, Wayne, this would be for single member LLCs or a sole prop that only has one owner, not if they have multiple owners. So if they have one owner, Sacramento does allow for the CDC to make an argument of if they have a succession plan and how that successor is going to take over the business. Marvin, if we can go to the raise hand.
All right. Caller, your line is unmuted.
Hi, this is David Amick with Premier Capital, and I'm on slide 12. When you state that on SBA Form 1081 for CDC staff, name checks are no longer accepted, can you explain what you mean by that? I'm assuming this is also for CDC Board and CDC Loan Committee. Thank you.
Sure. Sure, and we had another question on the written questions asking us to repeat that as well. And this is really important because we have a lot of TPLs who might be participating on CDC loan committees. Loan committees have to go through 1081 background checks, but unless they have answered a question for a prior offense, they don't have to have a fingerprint card provided. We are not doing name checks. Previously, we did name checks. You just 1081. The name of the individual was checked through our security office, and you would get a clearance without having to do a fingerprint card. We no longer have name checks, and that's been true as per the last SOP. But they did give a grace period, which we're told ended on June 1st. Of doing name checks. So hopefully, with the new electronic fingerprint checks, when they're even required, that would help us to get the results back as soon as possible.
So if Ian had done this last year, he wouldn't have had to,
We're having a bit
I'm sorry, we're getting a lot of feedback. If we could, so any other questions, Marvin?
It does look like we have one more question here. I'm going to go ahead and go to that line now. Caller, your line is unmuted.
Hi, this is Samuel Durar again. On slide 27, there are some footnotes there that talks about collateral liquidation values, and it says land only 50%. I thought 504, we don't do land only. You can do only owner-occupied properties. I'm not sure why the note is there. Can somebody explain?
This is David. I'll take that one. There are certain times when the purchase, 504 eligible purchase can be for land only. If it can be determined that the business is going to use and occupy that land. We've had it for storage yards, for material handling companies, things like that, where there is no building, or maybe the building is on the adjacent parcel, and that parcel is simply vacant land where they're going to store materials and trucks and do things like that. So it doesn't happen often, but we do occasionally see just vacant land as long as it is being used by the business.
Okay, thank you.
Great, thank you, Marvin. And David, one of the questions that came up on my side is someone's asking in regards to the 504 debt refi without expansion. Now that we've extended the SBA authorization from 6 months to 9 months, they're asking if that's for the interim lender or if that's for the debenture to be funded. It's for the debenture to be funded. The authorization is only good for 9 months in this case. Just like how the authorization is good for only 4 years on the regular 504 program, on the 504 refi without expansion, the SBA authorization is only good for 9 months. They have another question in regards to where can they check for the interest rate on the 504 refi debenture funding. Linda, that would be on Eagle Compliance website?
Sure.
Yes. So on the Eagle Compliance website, they list the interest rates on there. There's also I think you can also check on NADCO's website too. Any other questions, Marvin?
No questions at the moment. Again, you can press #2 on your telephone keypad if you do have a question at this time. And we're receiving no questions at the moment.
Thanks, everyone, for your participation in today's call. As always, lively dialogue. Thank you for the opportunity to provide you with updates on the 504 program. Thanks for all you're doing to support our program in your communities and for being our partners in job creation across America. So from Washington, D.C. and from the Sacramento Loan Processing Center, thank you and good day.
Thank you for joining today's conference. The session is now concluded, and you may disconnect.